What's up guys, Kevin here, and unfortunately, if you're one of the millions of users that uses PayPal to sell goods and services, they are now required to tell the IRS how much money you've made if you make more than $600 in payments in a given calendar year. Now, a lot of you have probably heard this before. If you're hearing this now for the first time, I do apologize. You have to hear it this way. But the good news is there is a loophole. I think most people that are concerned with this aren't as affected as they think, if they're affected at all. And it's really just kind of in the fine print of how this law is being implemented. So in this video, I just wanted to give you a little bit of background on where this law came from, what it actually means, and hopefully give you some insight on if you actually need to give more money to the black hole we call the IRS. So let's go ahead and talk about it. Now, this all started with the American Rescue Plan of 2021. And if you don't know what that plan was, think stimulus checks. That should trigger a memory for most of you, but that was included in this plan. So the main goal of the plan was to help the US economy recover. Like I said, it had stimulus checks, some reduced tax liability, some increased tax credits and things like that. But of course, the plan included a lot of other things like most things Congress do. So it had a lot of little laws and changes included in one big package. And this PayPal new reporting requirement was one of them. So what they did was they basically lowered the threshold from $200,000 a year or 200 transactions to just $600 a year. And I think the idea was that there are a lot of people that are using PayPal to sell goods and services, but they're not actually reporting it. So now this basically makes PayPal report your earnings to the IRS. So there's no way you can say you didn't know that that needed to be reported. Now, I think some of this was due to a lot of the changes that we've seen with online transactions, having to have sales tax and all of that stuff implemented. So this was included as another way to further improve how they're tracking how much taxes you should owe. So now they're basically making all of these payment processing companies report how much money you make if it's over $600. Now, the good news is there is a little bit of relief. This was implemented in 2021, but they're actually having a phased in approach. So up until 2023, the requirements were still the same. If you didn't make more than $20,000 or have more than 200 transactions, then they didn't have to report your earnings to the IRS. But in 2024, the requirement dropped to $5,000. In 2025, it dropped to $2,500. And in 2026, it'll finally drop to the $600. So the good news is we're not affected by that $600 limit yet. Also keep in mind that this is for the calendar year and you report the calendar year taxes in the following year. So the 1099-K form and any tax reporting you'll get from PayPal will reflect your 2024 earnings based on the 2024 laws. So that's the $5,000 threshold. Now, also, there are some states with a lower threshold. So if you live in Illinois, your threshold is going to be $1,000 and 4 transactions. So that's already lower than the $5,000 limit that the federal government implemented last year. If you're in Illinois, it's going to be lower. And also, if you live in Maryland, Massachusetts, Vermont, or Virginia, it is already at the $600 limit. So again, if you had more than $600 in payments in 2024, you're going to get a 1099-K form this year for your taxes. Now, the thing to consider there is this is all based on your last known address for the given calendar year. So if you lived in Chicago or Virginia up until December 29th, and then you moved and you had a different address on file on December 31st, then you're not going to be affected by those tax laws in that state. But if you move to those states and that's where you lived at the end of the calendar year, then yes, you'll be held to those tax reporting requirements. Now, this doesn't only affect PayPal. The way that they term it is third-party settlement organizations, or TPSO, basically payment processing companies. So it affects anybody that tracks whether your payments are for goods and services or if they're just for personal use. So that includes PayPal, Venmo, Cash App. A lot of different companies are going to be affected by these new laws. This also can come into impact your affiliate sales, because if you work with certain companies, they pay you out every month through PayPal. So their payments will be reported on this 1099-K form when PayPal, sends it to the IRS. This also affects personal and business accounts because, again, this is primarily focused on goods and services transactions. So if you do any goods and services transactions to give your customer or whoever you're selling it to some buyer protection, then it's going to fall into this category. Now, on the other hand, if you've got personal transactions where you're just sending money to friends and family, that is not going to be included in this threshold. It's only really for items or services that you're selling and taking a payment through those payment processing companies. Now, I think the big loophole here is that there are a lot of different ways payments you get through these apps, even if they are goods and services, are not actually taxable. A big one, of course, is if it was done by mistake. So let's say you received some money from your friends or family, but they sent it to you as goods and services by mistake. So you were all frustrated because they probably took out a fee or whatever, but actually when this gets reported, you know that that was a personal transaction, so that is not going to be included in your taxable income. The other thing to consider is this is primarily focused on taxable income. So if you did not make money on the transaction, generally speaking, it's not going to be taxed. So for example, if you bought a product for $1,000 and you sold it used online, the person paid you through PayPal for $800 and you shipped it to them, then it's not going to be taxable income because you actually lost money on that transaction. You lost $200. So for most people that are buying something new and selling used parts online and taking payments through PayPal, that should not be considered taxable income. The other thing is if you did make money, let's say you bought something for $1,000 and sold it for $1,200, you're not actually liable for the full $1,200. You're only liable for the profit of $200 that you made. So again, this is where it becomes really important for you to know what your transactions were and what your actual tax liability is for each transaction, because some or all of some of those transactions might not actually be taxable. The other thing is processing fees or any additional fees associated with the transaction. That affects your bottom line, but it also reduces your taxable income and your tax liability. So just keep in mind anything like shipping, processing fees, whatever you've got that you had to pay as a part of that transaction and took away from your income is going to be a tax deduction, so it won't actually affect how much taxes you owe. And of course, if you go to the IRS website, they have an article that shares with you all of these details and more, so you can see exactly what to do with the 1099-K form when you receive it and how to actually translate the information that's on it. Now, one other thing to consider is this doesn't actually change your tax liability. Even if PayPal or Venmo or whoever isn't reporting your taxable income to the IRS, you are still responsible for any income that you make. This just means that they're actually reporting it to the IRS and you're going to get a form reflecting that gross amount. But in reality, how much you owe in taxes should not change. So I know a lot of people think this is like messing up all of their plans and messing up their taxes. But if it is actually increasing your taxes significantly, then that just means you weren't reporting income that you should have been reporting anyway. I know it sucks. We don't like having to just throw money away every year, but that's just kind of the law right now. Now, of course, like I said, if all you're doing is selling used parts and taking a loss on things that you've had for a while, then this really shouldn't impact your taxes much at all because you're typically not making money selling something used, so that would wash out everything to zero income. So on that note, if you are going to be getting a 1099-K form because you were over that $5,000 threshold last year, first of all, congratulations on having a good year, but there are a couple things you should do with the form when you receive it. First is, of course, making sure that the form is accurate. So double check all of your information, your social security number, tax ID, all of that stuff on there is correct. Also double check the gross amount, make sure that that is accurate as well, because if there are any issues, you'll want to reach out to your payment processing company and get that form updated. But even if it's not updated, you should have good traceability of how much money you made. So go through that, make sure it's included on your taxes, and also consider how much money you actually owe. You should be deducting everything like materials if you're making parts, shipping charges if you're shipping stuff. Everything that goes into it should be a nice balance so that you are only paying taxes on your actual income. So hopefully that minimizes the impact on your taxes if you're in the boat of some people that are, just selling stuff on Facebook or online forums or whatever, and it's a bunch of used stuff that isn't really making you any money. You're just trying to avoid losing money or throwing stuff away that has some value. This will hopefully help you understand that you can minimize how this is going to impact your taxes. So the forms should be available on January 31st. If you're a go-getter, you'll go ahead and start getting your paperwork in order and make sure all of those numbers are correct. So when the form comes in, it just matches what you already knew, and you should be good to go with filing your taxes this year. So hopefully this helps you guys out. Again, I just wanted to share a little bit of information that I was able to dig up by reading through all of these laws and information that was on the IRS website. Let me know if this actually is affecting you as much as you thought, or if this is giving you a little bit of relief that it's probably not really something that should impact your end of year financial goals. But for now, I think that's it for this video. So thank you guys for stopping by. Don't forget to like and subscribe, and I'll see you on the next one.